Smile, Jill.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight in the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. And Chris, it certainly has been a Monday for stocks as they continue to react to Fed Chairman Powell's comments on interest rates, looking to take them from 25 basis point rate rises to 50 basis point rate rises. And I think perhaps it's signaling to the market that there's only so much the Fed can do to get inflation under control. And there's so much going on underneath the surface that rate hikes might not be enough.
His comments were, I'm not sure why people are kind of surprised me. It definitely put a crimp into the tech and biotech rally a little bit, but his comments were kind of a little bit more broad-based at the NABE speech he gave this morning. The one sentence that was pulled out was the first part of two, and he said he would also do what they need to do in case they saw it going the other way as well. So obviously most people have it focused on the potential for a 50 basis point hike. And again, all the meetings are live, which is what we already know. But realistically, there's kind of a lack of news driving the markets this week. Everything is hyper-focused on the Fed and obviously what's going on in Ukraine. And that's kind of where it stands right now. Earnings are kind of dying down a bit. You've got a real minimal amount of macro or economic news coming out this week. So really, any comments will be hyper-focused and impact the markets on an intraday basis. And that's what we're seeing here today.
And Chris, if we take a look at your first chart here, give us an update on some technical levels to watch.
Right. So we've had a fantastic week in the index, all things considered. It's the best week since November 2020. We're up 8.4% last week. And it looks like the index is consolidating here. We were higher a little bit this morning, but we're really consolidating around those peak movements from Friday's close. Now, remember, Friday was quad witch. We had one of the highest volume days in years. It was the second highest volume day year to date, and the fifth highest volume date in nearly 5 years. And that includes the COVID 2020 scenario that we saw back in March, with over 19 billion shares trading on the consolidated tape, which is always good. You always want to see a significant move higher on higher volumes. That validates that move, and that's what we're looking at here. So look for the index to consolidate. We broke through last week and then today two key Fibonacci retracement levels at the 23.6 and the 38.2 level. Right now, we're sitting at the 38.2, which is 14,200, give or take. We like to see the index close at or above this level. We keep running into resistance near term at the 50-day moving average, which is the purple line on the chart that's descending down and to the right, and that's 14,410. So look for it to consolidate in that level. And if we break out one way or another, it'll be significant. But the way this is shaping up, granted, a black swan event, which is what we're potentially looking at here with Ukraine, could move this index significantly lower. But again, the path of least resistance at the moment seems to be neutral to slightly higher. Look for the chart that moves sideways to the right in consolidation before another breakout attempt higher.
Yeah, Chris, it's so interesting. Makes you wonder if we weren't grappling with geopolitical headlines, because it appeared that the market was coming to terms with what needed to be done with inflation, the Fed's course of action. So it makes you wonder where we would have been if this tragedy wasn't occurring overseas. But that's anyone's conjecture. Let's take a look at your last chart here and look at some of the names that are relatively outperforming.
Right. At this moment, there's only about a dozen names that are trading positively, though the index has moved lower. Not a lot of news flow out there, though PDD is trading off about 8.5% on earnings today, and a lot of the other Chinese issuers and travel names that we saw a little bit of rebound last week are down anywhere from 3.5% to 5%, with PDD and JD being the outliers. The thought here is that they're consolidating a little bit on the back end of that news, and hopefully with China, some of the reopenings from the COVID shutdowns that we saw there.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.